And hello everybody, welcome to the Mango Grove. My name is Krisha, and this is today's Bitcoin analysis video. Now today guys, we're only going to be sticking to Bitcoin because, well, we did see a bit of volatility, stepping on the chart, and I'm sure many of you guys have questions regarding what's happening with Bitcoin, what really sort of incited this move to the downside, because it was a rather rapid one compared to, well, the prevailing volatility that we've seen on Bitcoin, right? It's just been inching up, edging down. So with all of this choppy sort of price action, then suddenly you see a very, very sudden burst of volatility. That usually tends to spook people out. So today we're going to be sticking to Bitcoin primarily. Okay, here's what we're going to be talking about. We'll be talking about, of course, Bitcoin's dump that happened just a couple of hours ago. In addition to, I have a quick cycle tip for you guys in terms of really sort of positioning on the cycle. I have a quick sort of a lesson rather that's being reinforced now time and time again every time I'm playing Bitcoin or the altcoins in this particular juncture. And then on the third note, we'll be talking about the overarching trend for Bitcoin. Has anything really changed in terms of that macro outlook for Bitcoin? Okay, I have certain signatures that I will be going over again just to see if anything has been invalidated, right? Because we have a thesis so far, and that thesis is that we are in reversal territory right now. Right, so now we want to find out, is any of those signatures, those reversal signatures, invalidated with this current move? So we'll be talking about that, and then I'll be giving you some immediate support regions, specifically hinged on the golden cross, the daily golden cross. So with that, guys, we can jump right in. Now, of course, it goes without saying that like button goes a very, very long way. So if you guys happen to enjoying the content so far, make sure to smash the like. But of course, if you want to wait until the end to see if you derive any value from here whatsoever, then by all means you can wait until the end. Alrighty, so with that, let's jump right in. Alright, so to start with today's Bitcoin dump, how far low is this gonna go? Now the Bitcoin dump, guys, while we had not anticipated the volatility kicking in as aggressively as it did, but it's very, very classic Bitcoin wherein we close over a major level, because if you guys notice, we have that monthly 55 EMA that we were looking at, and I was looking at how price was performing against that level on some of our lower time frames. And if I take you guys on over to the daily time frame, you'll notice that Bitcoin actually closed the daily over that region, only to begin today's candle with a swift breakdown. And it's so classic Bitcoin, where it actually does this, where it closes over a critical region only to break down very, very rapidly, very swiftly, breaking the entire volatility profile. And that's technically what really spooks people out. But the overarching view, guys, what is it that we've been talking about now for, well, the past 3-4 days, is this. On the monthly time frame, we were specifically looking at how that monthly closed, right? The monthly closed underneath the 55 EMA. Now, in order for me to really, and I told you guys this, if I am anticipating an immediate move from Bitcoin all the way up to the $27,000 region, I want to see the monthly close over the 55 EMA, which we failed to get. And that 55 EMA was clutch. Why was that? Because ever since we broke down into this bear market phase right here, where Bitcoin was sitting at 18.7K, then 15.8K, was, every time we actually came up to rally into some of our significant regions of resistance overhead, we had actually met with rejection at that 55 EMA, right? Time and time again for a good 5 months now. For 5 months now, Bitcoin has been getting rejected on the 55 EMA. 1, 2, 3, 4. And now this was the month of Feb, right? So this was the 5th month that Bitcoin actually got rejected off that 55 EMA. Now, based on what this was doing and based on some of the other fundamental data points out there in terms of macro markets, I was looking at this as, okay, Bitcoin looks like it's likely going to start heading into more of a consolidation phase right here. Right? And the consolidation zone that we were looking at was primarily hinged on the 55 EMA as overhead resistance and underneath support at the monthly 10 simple moving average, which is currently coming in at around $20,600. Okay, so this was the consolidation phase. Now, this was expected, but what was not expected was the volatility profile. Now, this also brings me into a good segue for, a quick cycle tip. Now, when Bitcoin actually had this beautiful rally to the upside, which is a good 40% to the upside, this got a lot of people to sort of FOMO, right? It got a lot of people very, very emotional, very looking to FOMO into resistance. And this is when I told you guys that if you're looking to position here, this is not the time to be positioning. The time that you should have been positioning was here at around 18.7K when Bitcoin actually took it out. right? Now, in these market junctures, the quick tip that I'm seeing that's being reinforced time and time again, not just on Bitcoin, but also the altcoins, is that you can be patient during these market conditions, right? If this is the cycle, try and assess everyone's emotions during the various phases of the cycle. So this is phase 1, right? Phase 2, phase 3, phase 4, and phase 5. Now, in phase 1 and phase 5, there is a lot of fear in the market. There are a lot of people falling victim to various cognitive biases that you can take advantage of. Okay, so it's really understanding where we are in this market cycle to really figure out whether or not you can get patient on your bid, whether or not market participants are going to feel they're going to be very quick to sell off their bags, because it's in those rapid sell-offs that you can actually take advantage of market inefficiencies. Right, so now what we're seeing here is that we are currently where I believe that we are in P1 of the entire market cycle, right? There is going to be fear, and where there is fear, you can get patient. All right, so if there's one thing that this market juncture has been reinforcing is that on reversals, guys, people are not too ecstatic to be getting in all of their positions and buying up against resistance and breaking resistance. Yes, ultimately resistance too are meant to be broken, but during the right phases of the market. Right? What are market participants feeling like? And if there is fear, you can really gun for that better bid opportunity. Okay, so when there's fear in the market, patience pays. All right, so now we're seeing price pull back. Now, question is where to from here, right? What are the major targets that I'm seeing underneath this? Now, of course, we have the main target being the 10 simple moving average, which comes in at around 20.6K. But in addition to 20.6K being one of the targets that we can gun for, if I take you guys on over to the daily time frame, right, and I have to really assess the entire sort of price structure on chart, I'm honestly seeing quite a few things, okay? There's one more thing that leads to the monthly 10 SMA being the bid opportunity, and which is this. I know a lot of people are looking at this pattern right here, which is the bear flag pattern, right? This is the bear flag pattern. If I have to go ahead and take the measured move of the bear flag, let's go ahead, do that, and plot it on the break. Where will that take Bitcoin down to? Once again, monthly 10 simple moving average. But in addition to that being one of the targets to the downside, we are currently sitting smack on a target, and this is it right here. Okay, I'm looking at the 55 EMA and the 200 exponential moving average. Now, I had gone over this signature. I had gone over the significance of getting the golden cross and then price pulling back into the 55 EMA. I will be linking the entire sort of back testing I did on the golden cross towards the end of the video. That way you guys can go ahead and check that one out, because not only did I spot the signature, not only did I go ahead and back test it, I also made a very, very key observation how price performs right after we get the golden cross. And what is that critical support that we usually tend to get pulled into? That critical support, guys, I'm just going to give it to you right here, is, the 55 EMA. Usually when we get the golden cross, okay, the observation is this. We get the golden cross, after which price pulls right back into that 55 EMA, 200 EMA zone. Okay, now this is exactly what we're seeing right here. Now, more often than not, that golden cross has been very, very critical in really giving us the signal on the next markup phase for the market. Right? Now, we got the golden cross, yes, but more often than not, what price ends up doing is it just ends up consolidating within the range, putting in a series of higher lows. So now question is this the next higher low? Right? Now, for as long as we hold this entire region as support, I'm saying that this is likely going to be the next higher low. If, however, we break the 200 exponential moving average, I will be looking for the next move to the downside, getting into the monthly 10 SMA. Okay, which comes in at around 20.6K. Now, as things stand right now, the 55 EMA, guys, comes in at around, 22.1K, and the 200 EMA comes in at around 21.7K. But this is the first bid zone, in my opinion. And the second bid zone comes in at the monthly 10 simple moving average. Now, if you had to really put a gun to my head and ask me, Krisha, has anything really changed? Has your overarching view changed? A lot of you guys know that I have been bullish. throughout this entire region. And for me, I'm picking the side right here because this is essentially going to help me also allocate into my altcoin positions and really help me understand whether this is the time to accumulate or not. Because it's in this market juncture where I want to get in my big sort of my big long-term allocations, and that's what I'm focusing on right now. Okay, that is my primary focus during this market phase. Now, if you had to ask me, Krisha, based on this current sort of dump to the downside, has anything changed for me? And the answer to that question is no. Okay, I am still leaning bullish. For as long as my signatures hold, I am leaning bullish. Now, as far as my signatures are concerned, now this brings us to our overarching trend. I do believe that the overarching sort of signature, the overarching trend is still bullish. And why is that? Because as many of you guys know, I'm looking at a total of 4 bull run signatures, okay, out of which 3 have gone off. Now, question is, have any of those 3 been negated with this move right here? So let's go ahead and check those out quickly. I'm going to get on over to the 4-day time frame. The first signature was hinged on the 4-day dynamic, right? Have we lost the 4-day dynamic? And the answer to that question is no, we have not lost the 4-day dynamic. We're currently still living over that region. Okay, the second bull run trigger was hinged on the weekly dynamic. Have we lost that? The answer to that question, if I just zoom into this, is no. Now, the dynamic, guys, you need to understand, was built so that it may keep us on the right side of the market even during times like this. It makes certain that I am not spooked out of my long-term positions. Okay, that's why this indicator was built to begin with. Alrighty, so I'm seeing that, okay, this is still intact. I am not getting spooked out of my long-term allocation right here. No freaking way. Alrighty, something really drastic has to happen for me to reevaluate, but for now, this trigger is intact. Now, the third bull run trigger that we had was primarily hinged on the monthly oscillator, right? We were looking at the monthly Stokes crossing bullish. And has that changed with this current move that we got on the chart? Has that changed? Did this cross bearish right here? And the answer to that question, let me just zoom in. The answer to that question is no, this is still in bullish territory. Right, now notice if I just backtest the Stokes with you, just zoom out of the picture, every time we get a bullish cross within underneath that 25%, the 20 percentile zone, right, it has happened very, very seldom in the past, but it's usually lined up with the reversals, with market reversals. Now, the first instance that we got the cross at was here on June 2015. This was us emerging out of that bear market of, well, 2015. That was the first and only bullish cross we got getting into the next sort of markup phase, getting into the bull run of 2016. Now, the next bullish crossover that we got underneath the 20 percentile zone was right here during the bear market of, 2018, 2019. Us emerging out of that, we got the bullish cross and then a swift rally to the upside. Now, this is the third time that we're getting the bullish cross underneath the 20 percentile zone, okay? And notice how that is still intact. We have not crossed bearish. Alrighty, so now we have 3 out of 4 bull run signatures still intact. The fourth one, of course, never went off. We're still waiting on the fourth one to go off. That is primarily hinged on the weekly. You guys already know this, but I'll give you guys a quick refresher anyways. Okay, weekly dynamic Ichimoku calculation, and let's go ahead and put on the 55 simple moving average, because this is the filter to make sure we're not getting faked out. And also notice how that filter really kept us safe there, right? We got the close over the Ichimoku dynamic, however, failed to close over the 55 EMA and then broke back in, right? So this also basically gives us a hint on whether or not we can expect a better bid. So this is our investor signature that has not gone off just yet. Okay, however, you can see the 55 EMA inching downward ever so slightly. Now, while this has still yet to trigger, notice the region that price has come down to test. It's come down to test the bottom of the weekly dynamic cloud right there, right? Also lining up with our golden cross on the daily time frame, because this is where the 55 EMA was, as well as the 200 exponential moving average was. So now this is target 1 and this is target 2. Okay, now just given that 3 out of my 4 bull run triggers are still, they're still on. They have not gone off with this most recent move to the downside. I am still leaning bullish in this macro juncture right here. Okay, so my macro view on Bitcoin right now still remains intact on the bullish direction. Now with this, guys, we've actually wrapped up all agenda points. Not in order, but we've sort of gone over all of it, right? Which is today's Bitcoin dump, my thoughts on that. Yes, the volatility likely spooked people out, but this is something that, we were technically anticipating, essentially a consolidation within this range, within the monthly range. Now, if you're playing the lower time frames, yes, for you, it is going to be volatile. Okay. I also gave you a quick cycle tip. As long as you're seeing fear in the market, guys, and you're going to see fear in phase 1 and phase 5 of the market, essentially your accumulation and your distribution zones, basically those bear market zones, those reversal zones. You're either in reversal zones, guys, you're either going to see 1, euphoria, or 2, fear. Okay. When you see fear, you can get patient. Okay. When there is fear, patience pays. Memorize that one. Alrighty. So that is a quick cycle tip. We spoke about the overarching trend. My view on the overarching trend, guys, is still bullish for as long as my triggers stay intact, my bull run triggers stay intact, which they all are for now. I am still bullish on the overarching trend. I will reevaluate if things change. Now, this actually brings me to one of the housekeeping things. Now, because many of my bull run triggers actually are hinged on the Mango dynamic indicator, I got a couple of questions from people. Now, people are sort of trying to, at least for those of you trying to decide whether or not to get the dynamic or to get the seed program. You guys know my thoughts on this already. Like, I will always recommend the Mango seed. Okay, the seed trading program, if I just take you on here. Now, this is the core course curriculum. While it is a challenge, but this is a very, very well thought out, well structured, very comprehensive course on technical analysis, okay, and also trading psychology, like making sure you're not falling victim to many of the cognitive biases that quite a few traders fall victim to. So if you have to really invest your time or your money in anything, I would say always, guys, the seed program. Like, this is how I learned everything that I learned. Okay, I was student number 1, so if you guys are deciding between the dynamic or the seed, get the seed. At the very least, get it first. All right, then everything else can build on top of this. But just understanding your fundamentals is going to really set you up for not just trading crypto, but even trading traditional or any other market out there for that matter. This is where you want to spend your time in. Alrighty, so that's just my one sort of housekeeping thing for those of you who have asked me questions about whether or not to get the dynamic. So now that's that. And now as far as the immediate support is concerned, now of course I've given you guys 2 targets, okay? We're looking at number 1, if I take you guys on over to the daily time frame, we're looking at number 1, that golden cross territory right there, right? So I'm looking, let's just go ahead and draw in that box. Okay, this is our target number 1 from the 55 EMA, which comes in at around 22.2K, and the 200 exponential moving average, which comes in around 21.7K. Now, historically, guys, every time we've gotten that golden cross is clutch. Like, it happens once on the daily time frame, getting into the bull market phase. Okay, yes, price, historically, price is also consolidated after we've gotten that golden cross, and usually that consolidation is a series of higher lows, okay, with support coming in on the retest of the 55 exponential and the 200 exponential. Now, this is something that I had mentioned during my back testing. I will be including the video of the back testing I conducted on the golden cross at the end of this one. All right, so for those of you interested, go ahead and check it out. Trust me, it's a lot of fun. All right, and that's something that you can maybe perhaps add to your playbook. Alrighty, so now we're looking at that as target number 1, and target number 2 contingent on us breaking that to the downside. Remember, it's always, trading is always a thing of if this, then that, right? It's a probability game, right? For now, we're looking at this being the first trade, the first target, right? And if we break this to the downside, then we're looking at the monthly 10 simple moving average as the second target to the downside. Okay, so T1. And this is T2. All right, the monthly 10 for now comes in around $20,670. When do I reevaluate much of my signatures as well as my overarching allocation? Well, that's when we break the 10 simple moving average to the downside. Only then will I reevaluate it. Okay, because at that point, not only are we taking out a very, very important bull run trigger, being the monthly 10 SMA, price would also be invalidating 2 out of my 4 bull run triggers. And this, in combination with losing the 10 SMA, would not be a good look. In combination with us losing that golden cross, because if price actually starts coming down there, I will be looking for these 2 things to actually flip bearish once again, getting another death cross on the 55 and the 200. Okay, but of course, these all if this and that scenarios, we're still currently sitting on support at the 200 exponential and 55 exponential moving average. Alrighty, so target 1 and target 2. Now, this is all I have for you guys today. I'm saying keep your emotions at bay. If you guys have to go out for a walk, go out for that walk. If you guys are trading the lower time frames, make sure you have your invalidation points at play. And this is the time where I would always implore you guys to start thinking of those long-term allocations. All right, we have quite a few triggers that have gone off that's basically telling me that, okay, this is the time to prepare for long-term allocations. Alrighty, now, yeah, if you guys enjoyed this video, make sure to smash that like button, and let me know if you guys have any thoughts in the comment section below. If there's anything that you think that I am missing on the chart, let me know about that, and I'll give it some thought, and perhaps if it's good enough, I'll probably bring it up in the next update, okay, as a contrary sort of point to everything that I'm discussing right here. And yeah, with this, guys, trade safely, trade stress-free, trade the mango way, trade the easy way. Ciao.